Hello everyone, Clifford Bennett, Chief Economist, ACY Securities. I hope you're having a good day. We saw some interesting development in markets over the last 24 hours. I guess the two highlights, well there's three really, will come to Australia. The two highlights were that US producer price inflation was modest at up 0.2%, which is encouraging. Again though, there was a hint in the fine print of the data that any increase in gasoline prices going forward could be highly problematic, both for producer price inflation and of course the flow-through effect into consumer price inflation, the CPI number. So the CPI has fallen, but it may not continue to fall for much longer, maybe 1 or 2 months, but then it will stabilize at a still very worrying level for the Federal Reserve. That's why the Federal Reserve, even if it does slow its interest rate hikes, it won't slow them, reduce them. It will be just back to 50 points. So I'm seeing 5, 6 50-point rate hikes from the Federal Reserve going forward until inflation is tamed. Hardly anything to be too excited on the bullish stock price side of things, though the market certainly was and did start to rally on that producer price inflation on the day yesterday in New York as well. However, things took a slight setback when it was learned that there had been a missile fall in Polish territory. So Poland got hit by a missile and 2 Polish people were killed, 2 farmers, which is very tragic and unfortunate for them and for the nation, and hopefully though not for the world. Hopefully things are contained. Of course, Ukraine immediately called it an attack by Russia on Poland, and NATO should respond. But the Polish authorities and NATO are taking a more cautious approach, which is good to see for all of us, because it could very well be, and the Russians claim this to be the case, that it was actually a Ukrainian anti-missile rocket that got off course and fell on Polish territory. Who knows, it could be actually be both, that a Polish missile was hit by a Ukrainian rocket and therefore they both tumbled off course into Polish territory. A very sad event and development, but it is good to see, whilst there have been emergency meetings by the Polish National Security Council and it looks like by NATO, that there will be a thorough investigation and not an immediate sort of knee-jerk response to this, as some Ukrainian authorities were suggesting. So thank goodness that's not happening. As we all know, any involvement of that nature, which was done on purpose, would certainly lead to a stern response from NATO, which could lead to an expanded European war. Now, I don't think an expanded European war is going to happen. I did forecast Russia would invade Ukraine. I wrote an essay on that before the fact as to why they would. I'm not for it. I could just see why they would, and they did. In terms of a wider European war, I do not see it happening, but I do see the occasional errors and risks. So it is possible. So don't think it isn't at all possible. It is definitely possible, but I tend to think it will not happen, which is a very good thing for all of us. Just be aware that most nations around the world now are positioning diplomatically and militarily just in case the worst case scenario develops, but we trust, I guess, we hope certainly that is not the case. For markets though, it did cause a little bit of hesitation. And I think really it just brings back into focus the whole downside economically, geopolitically of this conflict. And really, if the Fed's going to continue raising interest rates, the ECB is going to continue raising interest rates, the Bank of England is going to continue raising interest rates, why are people so aggressively buying stocks? Because these interest rate hikes are still happening as these economies decline. Now, German business morale improved a little bit. So it's only down terribly in contraction territory, and it had a small bounce. So don't get too excited about that. In Australia, the third thing I was going to come to, bringing it back down under to Australia, was the wage price gains data came out today, over 3%, 3.1 I think it was. And that's a big jump from 2.6%. It does confirm, which I forecast all along, and everyone said, no, that won't be the case. we have a wages prices spiral starting off in Australia. It's not as bad in the United States. It's much worse there, but we are seeing it here. And again, this is going to make the job of the RBA continuously very difficult. I note the Reserve Bank said that one of its major reasons for dropping from 50 points to 25 points at the last meeting was because they were worried about house prices dropping. Well, it's actually not their job to worry about house prices too much. It's their job to achieve full employment with low inflation. So I think at the next meeting, they'll be thinking you should be so worried about housing when wages inflation is taking off still. So the RBA will definitely maintain 25-point hikes, but it could easily be 10, 12, 15, 18 more hikes from the Reserve Bank of 25 points, or they will be moving back to 50 points. So certainly a continuing interest rate hike cycle in Australia, one of the most aggressive in history, and similarly in the Federal Reserve, similarly in the ECB, similarly in the Bank of England, all as these economies continue to point downhill with no bottom in sight. We'll be getting retail sales data for the US. Note, retail sales data in the US has been incredibly flat. It would be good to see some uptick. Please note when assessing this data, when it comes out, that it does not fully take into account inflationary price gains. So therefore, it does encompass those to some degree, which means that retail sales can go up without people necessarily buying more goods and services. It's just that their prices went up. So it doesn't necessarily mean an enthusiastic consumer. Because what's interesting about inflation this time round is it is in products that people simply have to buy. They can't choose not to buy the more expensive gasoline. They can't choose not to buy the more expensive energy. They can't choose not to buy the more expensive food. Well, they can, but only at the margin. And that's why retail sales, take it with a grain of salt if it is up. If it's a negative number, I mean, that will just be confirming US economic growth's going negative again in this fourth quarter, I would suggest to you. For markets, US dollar starting to look like, even if it isn't going to go to new highs, it is due a bounce. I would be very cautious about being long Australian dollars. I'd be very, very cautious about being long euro. Although if you see a reasonable response from NATO about this, it is a Ukrainian missile or some evidence to that effect, you could see the euro have a bit of a bounce because it was sold off on that news yesterday. So it could have a small bounce on the removal of that risk today. Hopefully that is what happens, not the other way around. But so the euro could have a small bounce, but I would be a seller of that bounce anyway. There's ongoing risk for the European situation. So we've had a very strong rally in the euro. I think it's probably a good opportunity to do some selling of the euro, some selling of the Australian dollar. And they've been screaming higher for a while. Absolutely. The US dollar overall, the great US dollar bubble I'd spoken of a month or so ago, is probably bursting, but we can't be sure of it. So just be a little bit careful. And in the short to near term, I think the US dollar can have a bit of a bounce as US stocks start to roll over to the downside as well. So keep an eye on all of that. I still like gold. I still like oil. I know oil had a sell-off, but I still like it here. Overall, the price structure is good for oil over the medium term, and it's great for gold over the long term. If the US dollar bubble were to burst, gold would be a major beneficiary, as would the oil price, but that means higher inflation everywhere, which means higher interest rates, which means you do not want to be long the stock market if that kind of scenario develops. All the best to you for your day. Clifford Bennett, Chief Economist, ACY Securities.